If you looked at your charts this morning, you may see a little bit of relief within the markets, and you may be wondering to yourself, is the crypto crash over? Is the worst over for the stock market? Are we about to V-shape and recover to Valhalla? Or is it just getting started? That's what we're going to discuss in today's show. Smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed. And let's get straight into the show content for today, because it is a sea of green, right? If you look over here on the daily, you're getting some massive bounces, and this shows that there is still risk appetite out there, and that could actually be problematic, right? If there is still risk appetite, that's the question. How much liquidity is there still left to flush out of the market when you have things like FARTCOIN up 40% almost, right, on the day? So is it a dead cat bounce? Is it the start of another new major move? These are the things that I want to discuss. We'll have a look at some of the key things that you need to be focused on leading into today, because I think we need to wait to see what the response is going to be from China, right? I'll show you why China is going to be so critical in today's moves for the market. If we have a look over here at the stock market on the weekly, well, that is still red, right? But we'll see how the stock market opens. We got a little bit of relief yesterday. Credit to Rand, who did, he often puts out these predictions, but saying that the stock market will close green on the day, and it did marginally close green. So we'll see, is the worst over? Are we going to put in a bit of relief over the coming days and weeks, right? So yesterday we saw the pump that was actually led due to fake news, right? The US stock market swung a massive $7 trillion in 30 minutes, right? That is significantly bigger than the crypto market. One day swing, twice the size of the crypto market in totality, in its entirety, right? Which is a huge move. And that's on a fake tariff deal. That's from 𝗪𝗂𝗪 led over here. And you can see basically what happened is there was a report saying that Trump is considering a 90-day pause on the tariffs. And that's what led to the start of the pump, right? The S&P 500 rallied 400 points just in a matter of minutes, and basically showcasing, that the market has a risk appetite. They want to jump back in. They want to put their money in the market. And then it was erased, right? Immediately, S&P 500 raised those 300 points of the rally. And that is following Trump on his Truth Social, who went and made a post and said, if China does not withdraw its 34% increase above their already long-term trading abuses by tomorrow, which is now today, April the 8th, 2025, then the US is going to impose another additional tariff on China of 50%, right? Which would basically mean that you're taking the total tariffs on China against China to 104%. And that's essentially what we're waiting for, right? So now we need to wait to see what China says, which means there could still be more volatility within the market, which means that if you are buying at these levels, you're definitely playing a little bit of a gambler's game, because when the market is uncertain, it usually moves into a risk-off environment. But there are some signs, right, that things could start to change. I want to outline those signs today. Number one, stock market coming into key support, and number two, gold potentially putting in a bit of a top. These are things that we do want to look at. You can also see, if you just keep it simple, right? Income Sharks tweet over here. When you look at the stock market, it's never going to end. You typically find those tops in the top of the parallel channel, and it's never been worse. That's your at least COVID crash over there. This was the a crash that we had at the end of the bear market, where the bear market came down sustainably, lower lows and lower highs, and met that trend line. And then again, we've said in the top over there, it's never going to end, targeting 8,000, 9,000 on the S&P 500. And now you've come all the way down. It's never going to get worse. The only question that you really should have over here is, are you going to sweep that low, right? Are you going to deviate this blue line over here, which is your upsloping trend line, and sweep below that, which is possible, but then still close back above, right? That would lead to one more leg of capitulation, right? So a lot of important things to look at over here. Here's your S&P 500. We spoke about this is a key and obvious level to be bidding straight into the 200-week moving average. Of course, it makes total sense. Also, when you do study how oversold, and I use that word with absolute caution because the market can always become more oversold. But when you look at how oversold the RSI is on the weekly time frame, every single time that you've come down into these levels has elicited a massive huge bounce within the stock market. And you can feel free to go back and back test this. You got this one over here. You got this one over here. Big moves, right? You got this one over here. You have every single one of these lows, especially when it meets up with that 200-week moving average. You do get pretty sizable bounces. Now, the question is, once we do get this bounce, is it going to lead into a lower high? What you can do to figure that out is use your fib levels, mark from the absolute high to the low over here, and you want to be focusing on that 50% level, which is 5,500. And if it gets really heated, 5,700 in your golden pocket over there at the 0.618 to 65, and then see if it sets in a lower high. If it does set in a lower high, then of course you're probably going down for another leg. So I do think that this was probably a decent buy on the stock market, but a lot of retail have been positioning in over here, which we've also spoken about, which means retail ultimately do get wrecked, which increases the possibility and the probability that you might get one more sweep through, right? And if you look at some of these price times, a lot of the biggest scares within the stock market have resulted in a sweep below that 200-week moving average, because it's just such an obvious area to bid, which means there's liquidity there, which means people have placed their stop losses underneath that 200-week moving average. So the question is like this over here. For example, you've hit that level on the nose, you rally towards the upside, you come back down, you sweep it, and then the run begins. Will we get something like that? Only time will tell, right? So a lot to play for, a lot to fight for over here within the markets. Another thing that I'm looking at is gold. Gold coming in to test its 50-day moving average. Gold typically being the risk-off asset, right? When the market is uncertain, they typically move into gold. When gold moves towards the upside, you typically see the risk on assets struggling. Now, since gold is coming into this key area, we do have 3 red candles in a row, and sometimes that's a good indication of a reversal. On top of that, you have the TD 9 sequential top on multiple different time frames, right? So we looked at it coming onto high time frames like the weekly, the 3-month time frame over here. There it is, 3-month time frame, as well as on a yearly potential top, right? So I want to be studying this chart closely. I want to be focused on this chart over here, and I'm looking at it on the weekly time frame, or actually let's go into the daily time frame over here. So on the daily time frame, focusing on the high to the low, if this has in fact topped, because we of course also have taken out that low. So we've got a break of structure here. You've swept that level, right? You can see this level over here has been swept. There you go. Candle closed below, officially closing below that level, suggesting that maybe if there is weakness over here and we're going to bounce up and set in a lower high, that in fact this is going to be a major reversal point for gold. Now it's interesting because we know that if we look at the correlation between gold and Bitcoin, or gold and the stock market, these are mostly inversely correlated, which is why you have the Spearman and the Pearson coefficient all the way down in the negative territory, right? Anywhere around that -1, the closest to -1, the more inversely correlated, which means if one goes up, the other goes down. If one goes down, the other goes up. So if gold goes down over here, then maybe, just maybe, this is correct, right? Maybe, just maybe, it's never been worse. And you hit that key level for the stock market and you start to put in a major rally from this point. Remember, the markets are very forward-looking as well. So we need to see, and that's the reason that they repositioned so aggressively into the market yesterday off of fake news, because most professional traders understand that, right? If there's one inclination that things may become better, immediately the market will reposition into the long trade, right? Because it's forward looking. And we need to pay attention to that. So with that being said, I'll be watching out for gold to potentially find weakness over here into that 0.5 level. That's going to be coming in at 3,062. I would probably start to scale into a short trade over here, something like this. Let's just actually put that a little bit neater. We'll grab our triangle over here. So I'd be looking to build a short trade between these levels over here for gold. So looking to short into this region over here with, of course, a hard stop loss above these highs, right? So that would be the short trade. It's a worthwhile risk to reward setup, because if gold does find weakness over here, essentially you would be short gold and you'd be long risk assets like Bitcoin as well as the stock market, right? So this next leg up on gold, as it does bounce, could lead to one more drop in the stock market as well as in crypto. And that's where you could take out those lows, something to pay attention to. For those of you that do want to trade gold, maybe it's not your usual trade that you take, But keep in mind, this is on a TD sequential 9 top. This shows exhaustion within the market on the high time frames. If you do want to trade this, believe it or not, you can actually trade it on Bybit, right? So use the link in the description below over here. Go through over here. Click on the link here for Bybit. You can take the gold short trade over here, claim up to a $30,000 sign-up bonus, and look for the gold futures chart over there, right? You can actually trade gold there, which is amazing. Cool. Let's get into crypto. Okay, and we have to talk a little bit also about the VIX and things like that, but let's have a look at crypto over here. In terms of the liquidations, this has come down. Remember, we had $1 billion worth of liquidations, majority coming from the long side. And then yesterday, over the last 24 hours, we've seen $500 million worth. And actually, the majority of those came from the short side. Of course, shorting after the moves already happened, it's not smart. And consequently, you're seeing them pay for that, right? So liquidations over there, short squeeze. It's important. It's important to focus on that because that short squeeze, if we look over here, let's just quickly go to the chart, is enough to easily create this bounce, right? It's not necessarily that this is massive spot buying longs coming into the market, establishing fair value over there. This move up could have easily been driven by shorts, right? So let's quickly see how the volume has changed. Volume is only up 15% today. If we look at the positioning of the long to short ratio on the top, it's more or less 50-50. So everything is as you would expect over there. We have the VIX, which spiked up to very, very, very high levels, showing again, probably not a bad place for the long term if you did buy the dip over there on the stock market. That goes the same is true for the NASDAQ, right? NASDAQ actually hitting an even more key level because you have a cleaner level of horizontal support over there, which has been found, and the RSI also presenting similar reads. Let's quickly see what happened over here on Tesla. Tesla threatening to lose that 200-week moving average. You can also see over here, the week's not over yet. So we'll see if it can hold this trend line over here. That's going to be interesting as well for Tesla. Let's see what NVIDIA did. NVIDIA still has a bit to go to reach fair value at the 200-week moving average. You can see that RSI as well downtrending over there and rejecting following the massive bearish divergence with price putting in high highs, RSI putting in lower highs over there. So for NVIDIA, which is a very, very volatile stock that swings bigger than sometimes crypto does, I would probably wait for a break of this trend line over here with the RSI before positioning too aggressively into something like NVIDIA, right? So we'll see if the VIX gets one more spike up, but at the end of the day, in terms of longer time frame plays, probably not a bad place to have established long trades on the stock market. Even if you do wick down a little bit lower, you could always buy a bit more. If we look at Bitcoin divided by the VIX, well, it actually has hit this key level. Remember, we spoke about this over the last couple of weeks. We said every time Bitcoin has hit this key level, you typically actually get a pretty large Bitcoin move. Now, you've come into this trend line quite a lot, especially recently. I like to see time reinforcing a level, right? So there's a lot of time between these two touch points. There's also a lot of time between these two touch points. You might not be able to see it, but that's a wick that came into the trend line over there. And that elicited a pretty big move. This is where Bitcoin came down to $49,000. And that move up led Bitcoin to rally to the $108,000 highs. But we don't have that much time that's reinforced these two levels over here, which is why I want to be a little bit more cautious as opposed to getting too optimistic, even though we are coming into key levels. I'd rather wait in case this level does actually break and you come down towards a key horizontal, right? So I'd rather wait for some levels to be reclaimed. Now, what are the levels that need to be reclaimed in order to reposition into a swing trade? Previously, we said it was this level over here. I think we can now drop that level, which gives us a better entry point, which means now, based on our exit, our initial exit at $92,000 to $94,000 before this breakdown, we really can't lose, right? Now you need to see price get back above this $86,000 to $87,000 region on the higher time frames. And if it does, you'll be reclaiming or recapturing that 21 weekly exponential moving average, which has given us a bearish signal as it's moving towards the downside. And on top of that, we can also focus on the stop and reversal indicators, which are also downtrending, and those will start to get a little bit more aggressive, right? So hopefully we can continue to ride this towards the downside, and then we'll have a much safer entry without actually risking any capital because we've already positioned out of the market. So a reclaim and hold above here would essentially get me interested again in at least to trade it back towards the highs, right? So that is the high time frame that we're looking at over there. This chart is still suggesting despite the fact that you've got a little bit of a move up over here, it's still telling me that there's a good chance that you'll come down into the $69,000 to $72,000 region, right? So I am paying attention to that. I'm keeping a close eye on it. My accounts are funded, and I am just awaiting for the right signal before I actually pull the trigger, right? Of course, you know, yesterday you could have already started to establish a position, but I'm looking to experience little to no drawdown on my entry. So that's the difference, right? You take on a lot more risk when you're trying to catch a falling knife, meaning that you have to be mentally prepared and positioned to experience drawdown, but then you might get the best price. But it comes at a price, right? It comes with risk, with increased risk. Personally, I don't mind buying a little bit higher, but taking on less risk, or not much risk at all, right? Meaning I would experience little to no drawdown whatsoever. I'm talking about 0.5%, 1% drawdown on my total portfolio, as opposed to if I blindly bought over here, this would have been your risk, right? If you blindly bought over there, you might risk 8%, 9% drawdown. I can't handle that. I can't handle those kind of swings if I'm entering in with massive size, right? So that's what we're looking at over there. If you don't already have your account funded, get your account funded. There's actually an amazing initiative over here with Bank, where you guys can actually win 1 ETH. Very, very, very interesting, at least, well, I don't know if you call this a competition, but initiative that they have over here. How does it work? You sign up and you can control how many spins you get, right? It doesn't take a lot to trade $1,000 worth of futures, right? How do you trade $1,000 worth of futures? If you take a $100 trade on 10x leverage and you open and close that trade, you qualify for 1 spin. Then you come through over here, you spin the wheel, and you can see what the prizes look like. 1 ETH, 1 SOL. What have we got over here? 0.001 BTC. We got 100 Pi. We got 10 XRP. You got 5 𝗬𝗎, 5 Cardano, 10 Doge. Basically, you guaranteed to win something, right? And the more that you trade over there, if you trade more than $200,000, you get 5 spins of that wheel. And then you can come and keep spinning and try and win. So if you want to participate with that, use the link in the description below. I know many of you have already signed up there to Bank. If you haven't already, click that link, sign up over there. Only this link. There's no other link in the whole world that will qualify you for this spin the wheel opportunity. It's only my link exclusively. So use it or don't use it. All right, let's continue. Looking at the 7-day daily exchange volume, it is starting to attempt to turn a corner. You're starting to slowly grind up with higher lows over there. But the broader structure is still very much towards the downside, right? You can see over there, lower lows and lower highs. If we look in relationship to the prior cycles, well, we didn't even get close to where those highs were, right? So I think it is high time to pay attention, because we did speak about this $50 billion region, which we've deviated below, right? We had like 34, but if you start to recapture that $50 billion region in terms of daily exchange volume, that's where things get quite interesting, especially if price does start to break structure. As it currently stands, the trends are still towards the downside. Don't get confused by that. Remember, relief rallies can be extreme. That's why you see things like this in terms of crypto rallying, 30, 40, 50%, right? Massive rallies. Look at that, hype up a lot. You got KCS, KuCoin, their token up a lot, Render up 19%. You can see massive relief rallies, but you're trading counter to the trend, right? That's what you have to be careful of. So what is the market doing right now? Well, this is going to be a major resistance region around that $83,000 zone. And you can see, of course, both spot and leverage, which is the orange and the white, were selling off towards the downside, and both of them jumped in for the small move towards the upside, and now they're starting to roll over, and you do need to be cautious of that, right? If you just draw a trend line over there and you start to break that trend down, and this is supporting that they're all moving in the same direction, then expect another move towards the downside, right? So here's your daily. We want this RSI level to break. You can see it's been governing price all the way towards the downside. You haven't been able to break out of this level yet, but there is still a chance that you get some sort of bullish divergence forming in the coming days and weeks. You're below all the moving averages over here. You can see price also struggling at the yellow horizontal line. If you can get above $80,685 today, well, that will allow for your RSI to trend towards the upside. But again, I wouldn't get too excited until such time as this RSI breaks out of that trend and price simultaneously also breaks out of that trend. Then you can consider all of this a deviation and a bit of a swing failure pattern, which you do have the possibility for that swing failure pattern, right? Remember, if you focus specifically on these lows over here, well, you've swept them, right? You've swept those lows. You did hit one of our key areas, right? You hit one of the key areas of interest over here. You narrowly missed it, right? But nevertheless, you still came into this fair value gap over here, and you've got the swing failure. So theoretically, many people will be taking the long trade over here, but risk to reward is not that great right now. It's putting it more to 1-to-1 if you're going to be targeting back towards the breakdown level, and I prefer 2-to-1 or higher. Okay, if I am going to be taking the trade. You did get a big volume spike over here, which again shows interest, right? You should pay attention because you have the daily exchange volume moving up, and now you got a big spike in the volume, but still below at least the volume profile over here, which has been acting as resistance throughout. So you're still caught in that pocket, right? And I would prefer to see one more sweep down more cleanly into the fair value gap at 72,510. I think that would provide a better risk to reward opportunity. Liquidity is building both on the up and the downside. Over the 3-day time frame, you definitely have more liquidity on the top side. Over the 24-hour time frame, let's have a look over here. Also more liquidity on the upside over there. So again, of course, always a possibility for a short squeeze, but the trend is the most important thing. So the areas that I'm focused on over here for today is really this, right? We'll see if bulls can get above that level over there. If bulls can start to get above this breakdown level, just call it $83,000, you know, maybe then you can say that the low's in. It's possible, right? Things are front runnable. The key support was over here. It is possible that they front run it, right? But keep in mind that there is a little bit of a deviation between crypto and the stock market, because if crypto had played out or Bitcoin had played out the way the stock market had, Bitcoin should be trading, you know, in the $50,000 region already to play out the same type of downside move. Remember, the stock market took out both April and August lows. Bitcoin is well above August lows, which is $49,000, right? So yeah, interesting. Anyway, I prefer to trade them when they're more in unison, because this is the way that the market more naturally moves, right? Okay, so keep an eye out on this level over here. 83,000 or $83,000 is the level to reclaim. That's the breakdown level. That's going to be your underside resistance. You have to treat the trend as your friend till the end, which is a downtrend, which means that your expectation should be a probable rejection from there and then sweeping down into a lower low. And then we're going to pay a lot of attention at the $72,000 to $73,000 region, right? You can see on the hourly time frame as well, you got your momentum oscillators are starting to turn the corner again, starting to roll over, which is going to make it really difficult in the short term for bulls to get back above this region over here. Again, that is the level to reclaim, right? If you start to reclaim that in the short term, things do start to look a little bit interesting. On Saturday, I did a show where we started to open up those positions on Sui and Solana. We'll talk about the altcoins. I did get those links for you. Remember, they had to create the bots. The bots are now listed below. For those of you that wanted them, those are the Pinex bots. There they are. There you can see it. There's the Solana one. It's a 5x trade. And there is the Sui one. How did we take these trades? Let's just quickly see if I can pull those levels up. Just give me a second. Let me see if I have those over here. Let me just find them. Key level 2. We need this one over here. These are the trade setups. Okay, we're on the daily time frame. Let's pull it up. All right, cool. So we have Solana. There we go. The basis of that trade idea was that price on Solana was going to deviate, possibly even as low as $78. But we're looking to scale into the position using the bots within this general area, right? So let's quickly pull that up. Within this general area, we're looking to scale in. So we've taken that trade, right? There it is. There's the Solana long. And then for the Sui one, the basis was that we're looking to scale into the trade all the way down towards these lows, you know, potentially down to about 165, which I'm going to highlight the area of interest. We're looking for a reaction or bounce out of that zone, and then you'd be selling into the relief rally, and consequently, there is the Sui bot. So for those of you that want that, it is there, right? It is there. The link's in the description below. You'd have to sign up to Pinex, and then you can come through and copy the strategies. They've also been dropped in the Whale Room Discord. All right, cool. We can have a look at a couple of other things and then go back into the altcoin mix and see where things are in terms of the altcoins. I definitely find this to be an interesting spot. I know that, emotionally, it would be really difficult to bid altcoins over here. But nevertheless, this is just super interesting because you have this pivot level over here, which is governed price towards the downside. You also have, when you measure from the high to the exact low, the 786, which is coming in over there at 66.27%. So I want to pay attention, right? All I want to do is just pay attention to see what the reaction is over here. I'm never trying to get in too early into these trades. But if we do see a big move up in the Bitcoin dominance and some kind of a swing failure pattern at that 0.786 level, that's going to be interesting, right? Maybe it only happens in May, right? If we draw the trajectory up over here, this leads up into May, June. Maybe it only happens in May or June, which is after the Fed have already had a couple of meetings. I think that we also have CPI coming out this week, right? So definitely pay attention to that. Let's quickly go to Forex Factory over here. And maybe they reposition their stance leading into, of course, May, into the meeting over there, and then you see a breakdown in the Bitcoin dominance, and we actually do get some sort of relief, right? So it's still a bit too soon for me personally to say that the absolute crypto cycle top is in. No doubt it's bearish until proven otherwise, but we do have CPI coming out on Thursday, right? So there it is, US core CPI month on month and year on year coming out on Thursday with unemployment claims, and then on the Friday, which is sometimes their real measure for what the inflation rate is doing, is the PPI, right? They're going to be looking at the PPI on Friday. So it's going to be very, very interesting times indeed, right? Cool. So that's Bitcoin dominance over there. USDT dominance, you got a little bit of a rejective candle pretty much coming almost perfectly into that downsloping trend line that we have marked off over here on the daily. So if we just contract this a little bit, got that downsloping trend line over there. So when this comes into resistance and Bitcoin comes into support, usually looking for the the other side of the trade where you reposition from USDT into Bitcoin. And I told you yesterday and the days leading up to yesterday that you could look to scale into Bitcoin. But as I've just said in today's show, personally, I'm going to wait for signs of strength because I prefer to trade with momentum where the trend is towards the upside. So if I position into Bitcoin, I want to buy into strength with momentum moving towards the upside, as opposed to attempting to catch a falling knife, right? But this is a good leading indicator as well that will showcase to you when things are starting to change. So it's not enough information yet over here. We've been tracking this step by step. Remember, if we look at the little pink box over here, and I'll highlight it again to you, this pink box over here, we've been trailing this all the way. We said, if you can break below the pink box down here, we'll get long Bitcoin. If you can break below the pink box here, we'll get long Bitcoin. If you can break below it over here, we'll get long Bitcoin. Then it was this level over here. This was the fake Trump pump over here that was artificially caused through his Truth Social post. We said if you can break below that, we'll get long crypto and Bitcoin. Then we moved it over here. Now we're sitting somewhere around here. Like, let's keep it safe. Let's stick with that level. If you can break below 5%, then you can start to open up swing longs on Bitcoin. And then what probably happens simultaneously is Bitcoin has recovered and reclaimed $86,000. And that shows that there's much more of a safe entry back into the market. ETH BTC continues to get hammered. This is the level to reclaim. If you really, really want a tight entry, I guess you can go over there at about 0.02157. But in my experience, it's always better to remain a bit more conservative. The true conservative entry would actually still probably be here, because that means that you have to get back above this 200-day moving average, which is currently downtrending. You need to break that trend. You have plenty of opportunity. You're not going to miss the move, right? That's something you need to get into your head, right? You're not going to miss the move. When you have moving averages aggressively downtrending like this, what first needs to happen is you need to establish a trading range. You never V-shape like this, ever, ever, ever. And if you did see a move like that, I can tell you with 99.99% probability, it's going to be met with massive resistance and immediately faded back towards the downside, and it's going to create new lows. So what would the reversal on ETH BTC look like? What should your expectation be? Your expectation should be that the 50 and 200 moving average will start to roll over like this, right? It'll start to roll over like this, and it's going to take a long time. Then you need to form a trading range where price will probably bounce and oscillate between those two levels. And then it will break out of that trading range. And then that's considered the deviation. Of course, if you want to be a bottom buyer, that's a different game that you're playing, which has a very low success rate, because you probably in that instance would have tried to buy the bottom everywhere, over here, and then you try to buy it over here, and then you try to buy it over here and on that wick over here, and you're trying to buy it again, and it just keeps going low and low, which means your average entry is over there, which means you could have had better capital preservation and just waited for the confirmation of the move and the breakout out of the trading range. The trading range will typically form following a strong downtrend. It's very, very rare, unless you have a sudden crash like the stock market has had, that you get a V-shaped recovery. And even then, it doesn't always have to happen, right? So those are the things you need to be very, very careful of. Keep a watchful eye out on the USDT dominance. Keep a watchful eye out as well on the 4-hour time frame for Bitcoin. If it can start to reclaim back above that $83,000 region, you know, maybe, just maybe, we're going to put in a bigger move. But it's, of course, heavily affected right now by the trade wars, right? You got these giants like China and the US fighting it out, right? So, and it seems like Donald Trump, of course, is pretty stuck in his ways, right? It doesn't look like he's going to back down. I don't know if China is going to back down either. So it could get very, very interesting. So it's all about capital preservation. You know, in this game, you need to survive. You need to survive to thrive. If you get blown out, you're out of the game. It's over, right? Game over. There's no chance of coming back. So, you know, protect your capital while you can. Let's have a look at some of the altcoins. So just again, going back to Solana, let's clean this up a little bit, remove our little circles over there. Okay, cool. Look, you know, right now it's finding resistance at the previous month's low. So we'll see what happens over here. You know, if that is the low, I would still anyway expect another sweep down towards about 100. And then you'd look for the deviation, the reclaim above the previous month's low. And then you can start to say, you know, maybe you can target up to about 126. So eventually there is going to be a big relief rally, guys. There will be a huge relief rally. I've said this before. It's going to put in about 100% move, right? At some point. But right now, this is still bearish, right? So your breakdown level is 122. If you can get above 122, then you know the relief rally is on and this thing's probably going to send much higher. If you look at 𝗬𝗎, and again, just to remind you, that's part of the reason why we're scaling into positions using these grid bots, right? Let me quickly see if I can bring this up just to show you exactly the way that it works. So here's the grid bot. One second. Let me just see. I don't want to dox too much information over here. Let's quickly pull up those grid bots. There we go. We got it over here. There we have it. So that's your grid bot, for example, on 𝗬𝗎. So the way the grid bot works is price comes down, buy into the green. And then when price starts to move up into the red, it will sell. And then it keeps doing that. And it oscillates between those various different levels. And that's essentially the aim over here. So when you do get the relief rally, those bots are going to sell into that relief rally for both Solana and 𝗬𝗎. Okay, let's have a look at Hype. You know, Hype, maybe a little bit of a scary picture. I didn't want to introduce it to you quite yet, but I forgot to remove this part of the chart. So I guess you guys are going to see it now. Firstly, what I want to say is it's hard to chart something that doesn't have too much price issue, right? So all we have to work with was this parallel channel. You can see where the highs were capped over there at the top. And then we have this downtrend over here. So we're looking for some sort of a low. That was actually Monday low that came pretty much perfectly into there. And you're getting a bit of a relief rally. Similar to Bitcoin, there is a possibility for a swing failure pattern, right? A swing failure pattern where bears try to take control. And this is your range low. You're treating this as your range low. Deviates. If you can reclaim that range low, yes, it opens up the long trade, right? And then you're going to find a bit of resistance at the previous month's mid-range at about $16.60, and then again around that $19-20 region. But what I wanted to identify or showcase to you, in crypto, this does play out quite a lot, and it is quite scary. So hold your breath. But there is a bear flag, right? Right now, the bear flag is playing out. It would be invalidated if you can start to get back above 1340. So this is where the risks come into play, right? A lot of these charts are presenting these really scary bear flags. I'm not saying this is absolutely going to happen, but it's something you have to entertain as possible, right? That's the most important thing as a trader, is never think that you know exactly what's going to happen. Look at things from a probabilistic standpoint. Is this possible? Well, it's in a downtrend and it's a pretty strong downtrend. So is it possible? Of course, it's possible, right? Is it likely? I don't think so. I don't think it's too likely, because for that to play out, you'd need to see, another 92% drop. So probably not going to happen. Unlikely, right? But it's possible. It's always possible. The alternative is I'd rather treat this as a swing failure, which came perfectly into this level over here. You hit that key zone that we're looking for, break back above, move up to about 14, 15, come back down into this just around $12, and then you can start to say that's your deviation and you can look for the long trade, right? Okay, so that's what we're looking at over there. What else have we got? Let me know in the comments if there is anything else that you do want to see. How's Casper doing? We haven't looked at Casper for a while. Still a very, very long-term downtrend, still strong towards the downside. Similar to so many of these charts, you have swept the previous month's low, right? So if you've swept the previous month's low, you can always zoom in on a lower time frame to try and look for a little bit of an entry over here. Look, if it comes back down, starts to test the previous month's low at about 0.055, you could easily take a long trade with a stop loss below. So there may be some long trades, at least in terms of relief rallies, that we can be looking at for the future. Let's quickly look at FARTCOIN, right, which had an absolutely enormous move. Let's see how that one's looking up. Where is it? It is FARTCOIN, right? That's had the big move. Yes, there we go. Let's just check. We'll go back to that. Do I not already have this one charted? Okay, we'll go to the one on, let's go to, okay, it's not written like that. That's a problem. It's the full name. There we go. We have it. FARTCOIN. Okay, there we go. This is FARTCOIN, right? So this is a pretty sizable move, right? It is definitely at least experiencing a bit of a relief rally. Areas that you need to be careful of is a sweep above the previous month's high. Here's the previous month's high. If you sweep that previous month's high and deviate, that says that the relief is over and you open up the short trade. Why? Well, that is your prior support. Therefore, your next test of that level, you'd be looking for resistance. So I'd be zooming in on a low time frame. And since the directional bias for the rest of the market is more downtrending and short, you should expect that this won't be too different, right? So don't get too excited. You know, it held the previous month's low, rallied to the previous month's high. If you sweep that previous month's high into this price zone that was resistance over here, that would actually mean I wouldn't just take the short blindly, but if it moves up and then swing fails like that, right? Puts in a high, puts in a lower high, that's where you start to take the short trade. So I'll map it out for you so it's a little bit cleaner over here. You know, you're looking at something like this, right? Watch in the coming days, if maybe put in a big spike, maybe even rally as high as like 80 cents. But if you put in a sharp reaction towards the downside, set in another lower high over there, that's where you look for the short trade, trade it back down towards the previous month's low. That would be a great trade, especially if the broader market is still risk off. Okay, cool. What else? What else, guys? Let me know in the comments. I'm keeping an eye out on the comment section. For those of you that do want to learn more, remember you can always join Whale School. The link is in the description below. It's completely free to join if you use one of the exchange links below. All right, cool. PEPE. I see there are some requests on PEPE. You know, it looked a little bit promising over here as it broke this downsloping trend line, held that level, ran to the previous month's high, and, you know, now it's come down. So I guess keep an eye out as well on a potential swing failure pattern. If things go risk off again and you sweep that previous month's low, reclaim, you know, that might open up a bit of a range trade. You can trade it to TP1 at the mid-range, TP2 at the range high over there. That's kind of what you're looking at. Okay. All right, cool. Generally speaking, guys, when you break out of high time frame ranges, which is what we saw in Bitcoin, you then enter into the start of a new trending move, and then you'll reestablish a new trading range after that downtrend. Now, Bitcoin has lost a key range level, right? This was your range, right? This was your range between the, let's just make them both pink. So between the two pink levels over here, there we go. This was your trading range. You started to lose that trading range. This was our first sign in the markets that something different is happening, right? Now we need to see if it holds this. If you do start to lose this level, that's where we know that we're in big trouble, right? So we'll find out soon enough. Other than that, I mean, I think, just keep your eyes out on the markets. You can always look at Banter bubbles as well in the newsroom section over here and keep an eye out. They're usually first to showcase if, China says something specific under the newsroom section. See once the president of China actually comes out with if he's going to back down or not. If he's not, probably that's where you get the next leg down in both crypto and equities, right? But I do think we're approaching peak fear, which means at some point we're going to put in that relief. So all the links are below for everything that you guys need. That is it from me. Thank you all so much for watching. The rest of you, I'll see you in Whale Room later today. I hope everyone has a safe and steady day out there. I'll catch you on the next one, and cheers for now.